Good afternoon, everyone. My name is Scott Tate, President and CEO of the Greater St. Charles County Chamber of Commerce. I want to thank you guys for joining us. Today for our Chamber University, we have Mike Sommer, who's going to provide some information on some tax tips. So Mike's a CPA, been a CPA forever, it seems like. Been around, been a chamber member, past board chair many years ago. Anyway, he's got some really good information regarding maybe some tax tips for 2020 and 2020 or 2021, 2020, right?
Yes, both.
Yes. All right. Perfect. So anyway, I'm going to go ahead and turn it over to Mike, and I'll bring his screen up here, and that way everybody can see it. And Mike, it's all you now.
Awesome.
And really quick, actually, before you get started, if anybody has any comment or questions or anything, if you'd enter them into the comment or into the chat area of wherever you're viewing, please do that, and then we could see that. So anyway, it's all you, Mike.
Thank you, Scott.
All right.
Yeah, and thank you to the Chamber for providing me the opportunity just to chat with everybody for an hour. They asked me to talk about the tax law changes that have come into play, not only for 2020, but 2021, and then also to try to keep it under an hour. So it's going to be a challenge, but I'm going to try to just give you guys some ideas, some thoughts. A lot of these concepts are going to be at the 40,000 foot level and just make you think that maybe you need to have a conversation with your tax professional. Talk to other folks in your office and let them know exactly what it is that you might be trying to do with the tax law changes. And there's been quite a few of them over the past 2 or 3 years that have come into play. So just to start with, as we mentioned, we're going to talk about some of the things that have changed for the 2020 tax year. And then we're going to talk just briefly about PPP loans, and that's both the first round and the second round, and a little bit about loan forgiveness and how that comes into play. We'll talk about the CARES Act. That's the one that's been around since March of 2020. And then, of course, there's some new tax credits, some payroll tax credits that are out there that you might be entitled to without even realizing it because of your particular business situation. And then there's the new Form 1099 NEC. We'll show that briefly and how that comes into play with your business. We might talk briefly about working from home. From what I understand, a few people might be doing that these days still. And then we're going to talk at the end about the individual tax returns. Each one of us files an individual 1040 tax return. And although a lot of the things we'll talk about the first half affect your business, there are quite a few things that might affect your personal individual return for 2020 and for future years. So with that, let's talk a little definitions first of all to start with. So you might see from time to time the initials TCJA, not to get too technical, but that stands for Tax Cuts and Job Acts. And that one's been around since December of 2017, almost 3 years now, and took effect January 1st, 2018. You might hear the Secure Act and the changes that are in effect there. Basically, just so you know, Secure stands for Setting Every Community Up for Retirement Enhancement Act. Now, I don't make these names up, and I'm sure there's somebody in Washington that's their full-time job, but this one was signed into law December of 2019, just a little over a year ago, and this particular act became effective January 1 of 2020. Then there's the CARES Act, like I mentioned earlier, and that one stands for the Coronist Act Relief and Economic Security Act. And that one was signed into law March of 2020. And that includes a $2.2 million cost. So big paycheck on the particular CARES Act, which includes some of the stimulus money for both individuals and PPP loans for small businesses. So, and of course, there is the PPP loan, and you probably have heard that terminology in the news, on the web. That is the Paycheck Protection Program. And of course, there was round 1 and round 2. And we just started round 2 last week, so we'll see how that all goes. And then, of course, there is what I call the CON Act. I'm not sure anybody else is calling it that, but that stands for the Consolidated Appropriation Act. That is the brand new one, signed into law December the 27th of 2020, and includes $900 billion additional stimulus relief. And if we had given this presentation a month ago, this would not even been part of what we were going to talk about. So we've added some new slides, and we're going to make sure, and you guys can double check me to make sure that we got them all back in the right order as we go through all these slides today. So let's start. There we go. Consolidated Appropriations Act. We just talked about that. Signed into law. We did that. So let's talk a little bit about the Paycheck Protection Program. And I'm actually going to kind of start backwards on that and talk about round 2. That's the one that just started last week. You could start applying if you were a business for the second round of PPP loans on January the 11th. That was a week ago Monday. You couldn't apply before then simply because the SBA didn't have the forms available for you. So there's probably still a lot of folks that are trying to put this together to see if they're eligible for round 2 money as a business for a PPP loan. And basically for the second distribution, D2 if you want to call it that, there's 3 requirements, different types of requirements that were around before for the first round. So if you're a small business, if you're a medium-sized business, you might be eligible for an additional loan under the Paycheck Protection Program if you meet these 3 qualifications. First of all, your business had to be in operation a year ago as of February 15th of 2020. That's one of the requirements. You must have 300 or fewer employees. So this will prevent the larger companies from applying for PPP loans this go round. And that was a major concern last time with the first round for the PPP loans. And the other one that is causing some concern for some businesses is there must be a 25% decrease in your gross receipts when you compare 2019 and 2020. Now keep in mind, this is not your net income. This is not your gross profit after cost of goods. This is actually your gross receipts when you look at your bank deposits 1 year over the next. And although some folks may have significant drops in their gross receipts, you may not qualify simply because you're not there. About a week or so ago, I looked at one of my clients at business who, for 2 of the quarters, they had an 18% drop in gross receipts. And for another quarter, they had a 24% drop in gross receipts. So for 2020, although their gross receipts were down significantly, they just didn't meet the threshold, the 25% threshold that's under the round 2 distributions for PPP loans. But if you do find out that you do qualify under these 3 basic things, and this is an overview. There's a lot more detail behind that than what I'm telling you today, simply because we don't have time to take care of all that. We could talk about this particular slide for the entire hour, which would help nobody, and I would lose you all. But just so you know, if you are possibly qualifying for a round 2 distribution, I would suggest contacting your bank initially. They're the ones that you're going to submit your PPP loan application to, who will then forward it on to the Small Business Administration to make sure that you do qualify for round 2 of the PPP checks. And let's talk just a little bit going backwards on round 1. So just to help you out, for those folks that did qualify for the round 1 of the PPP loans, that's the ones that occurred last year in the spring of 2020. You calculated what your loan amount would be based upon your particular situation. And for a lot of small businesses, it was calculated based upon 10 weeks of wages that your business might have had. Or if you were self-employed, what is your net profit for 10 weeks? That's how you determine what your PPP loan amount was going to be. And as long as then after you got the PPP loan, that you use those proceeds over the next 8 weeks to either pay for wages, or maybe you used it to pay for rent and utilities, then you could qualify to have the PPP loan turned into a grant. And as I mentioned originally, it was for an 8-week period. And as long as you used at least 75% of the loan for wages, it's going to be a grant down the road from the SBA rather than a loan. But a few weeks into it, they've changed the rules. And you'll see that a lot with the PPP loans, that everything seems to be in pencil. So what initially was an 8-week program became a 24-week program. as long as you use the proceeds appropriately over a 24-week period, the loan can be converted to a grant. And initially, as I said, you had to pay 75% for wages. Well, that was dropped to 40%. I'm sorry, that was dropped to 60%, which means you could use 40% of it for rent and utilities. So once again, a lot of discussion, a lot going on, a lot we don't have time to talk about, but hopefully if you were eligible, you did apply for round one, or you can do it at this time for a PPP loan. Now, the other thing is with round one, those proceeds for most folks have already gone out. We have to check, you have to check to see if you can have that loan forgiven. Right now, it's not showing up as income for your business. It's in the liability section. It's a loan that you probably owe back to the SBA unless you fill out an application form to have it forgiven. And if the loan was $50,000 or less, you can submit a Form 3508S for small to your bank to have the loan forgiven. And then there's the 3508 form back for those loans greater than $50,000. But the question I get quite a bit is the Paycheck Protection Program loan that I received from the SBA through my business, is it taxable to me, taxable to my business? And the answer initially that I gave is, well, maybe. And the reason was that the IRS initially said that any loan proceeds that were spent are used to, any loan proceeds that are spent are not subject to tax. However, the IRS then said later on that any money that was used for taxes or for payroll couldn't be deductible, which is a roundabout way of saying the loan's proceeds were taxable. So you need to make sure then that you don't follow the old rules. That's what the IRS said. And Congress said, no, that is definitely not our intent. And they changed that with the most recent act that went through. Well, just a second. There we go. We had to take care of our phone. Okay. So the other thing is, with the PPP loan, though, that changed most recently, as I said. Congress did not think the IRS was interpreting their intentions the way they wanted them to. So now the IRS has changed their position because of the changes in Congress, where the business expenses, the money that was used from the PPP loan, are now deductible. So in a sense, when you ask, is the PPP loan taxable? The answer now is no, it's not. And that changes with the most recent act that was just signed in law back in December. All right, let's get out of PPP loans.
Really quick, Mike, before we move on, we did have a question. I brought it up on the screen here. Regarding the PPP loans, the second round is, I guess they're talking about maybe the reduction in revenue. It says, is that any quarter in 2019 to 2020 or all quarters in regards to the second round of PPP?
Sure. In regards to the second round distribution, it can be any one quarter. And by quarter at this time, the interpretation until you hear otherwise is it's calendar quarter. So you have to look at January, February, and March as a quarter, for example, even though you might be on a fiscal year. So there's 4 different opportunities in 2020 for your gross receipts to drop by more than 25%. So if by chance you happen to be a restaurant or bar, I would think there's probably maybe the second quarter, April, May, and June, where your proceeds, your gross proceeds have dropped that 25%.
All right.
Anything else at this time? Okay.
See anything right now?
Great. All right, so we will move on then and just talk once again briefly about some of the new employer tax credits that have popped up over the past several months. There is the employee retention credit, and then there's also now the credit for sick and family leave. So let's talk just briefly about the employee retention credit. So this credit is a credit that's available for those employers that have continued to pay their employees even though their business has been shut. So I know a lot of employers did continue to pay their employees, at least for a while, to make sure that they retain their employees, to assist their employees during these difficult times. So the qualifications that are out there to be eligible, and this is refundable credit that you can file with your payroll tax returns. So to be eligible as an employer for the employee retention credit, as I mentioned, it's refundable. You can get the money back from the IRS. And it's a 50% tax credit initially. So you could get up to a $5,000 credit per employee based on the wages that you paid them. Yeah, so if you paid up to $10,000 in wages, obviously the 50% credit would be the $5,000. And that would include any health plan expenses in that $10,000 limit. And that initially was for the calendar year 2020. Had to be wages paid after March the 12th. That's when this became effective through the end of 2020, December 31st, 2020. So if those are qualifications for you, you might be eligible for the employee retention credit. And of course, the business had to be suspended due to government orders and COVID-19. So a great example might be here in St. Charles County, where a lot of the bars and lounges on Main Street recently, starting I think in November, if I remember correctly, were required to shut down at 11 o'clock each and every night. But you as an owner, if you continue to pay your employees their normal time, their normal hours, as if you were still open till 1:30, that additional amount you paid them, even though they were not working for you, could possibly qualify for the employee retention credit that's available through the IRS. Now, one thing that just happened a couple of weeks ago is they've extended the employee retention credit. And so now qualifying wages all the way through June the 30th of 2021. So maybe you didn't qualify in the past, maybe you qualify now, maybe you'll qualify in the future, depending upon what happens with the COVID virus. But there are opportunities out there for you. And once again, the credit amount has changed. If you remember back a few slides ago, I said it's 50% of the qualifying wages. Well, they bumped that up to 70% of the qualifying wages. And now it's then becomes a $7,000 max, and it's now per quarter. Previously, as I mentioned, it was a $5,000 max for the calendar year. It's now a higher percentage over a shorter period of time. And I don't want to geek out on you too much, but there's a lot of math is involved in doing all this. But that's one of the credits that's out there is the employee retention credit. There's also what they call the credit for sick and family leave. Once again, that's a brand new credit just started in 2020 that you might be eligible for as an employer. And this happens for your business, this credit that's available. If your employees fall into one of these three categories, and here, of course, we have a different starting date. This one is April 1st of 2020. If you paid an employee while they were gone because they were self-quarantined due to COVID, you might qualify. Or if they cared for someone else in their household, they might qualify for the credit. Or if you were forced to take care of your children due to a closure due to COVID, you might qualify for the credit for sick and family leave. So just some of the basics there. So if you continue to pay your employee who is unable to work because of COVID, and that would include teleworking, they're not able to work, you might be eligible for this particular credit. And you can get the credit for up to 80 hours of your employee's time that's paid. The maximum is $511, so the maximum per employee is $51.10. So you can see that can be a pretty significant credit that the employer is entitled to if they're paying their employees because of COVID. The second part I talked about is an employee who cares for someone else. They're required to stay home to take care of a spouse, to take care of a child who does have the coronavirus. In that particular case, 2/3 of their wages for up to 80 hours would qualify for this credit, up to a maximum of $200 per day, so $2,000 total per employee. And then the third category that I talked about is if you're required to take care of your child at home because maybe either their school or the daycare is closed due to COVID-19. And that happened quite a bit all across our county and across our state. In that particular scenario, once again, 2/3 of their wages could qualify for this potential credit, up to $200 per day. And that one has a little higher max, up to $10,000 total per employee. So a pretty significant amount of credit money might be available for you as an employer if your employees continue to get paid, but weren't able to provide any service to your company because of the COVID-19 virus. So as you can see, there's a lot of boxes to check, a lot of things to look over to make sure that truly your employees do qualify for this credit, whether it's the first one we talked about, the employee retention credit, where you paid an employee even though they weren't working for you because of a government-ordered shutdown, or maybe the second credit, the sick and family leave credit, where you continue to pay your employee because of the fact that they had COVID, a family member had COVID, or you were required to do childcare due to COVID affecting their school or daycare. And initially, on the first one that we talked about, the employee retention credit, you couldn't cross your funds. You couldn't be eligible for that credit if you also got a PPP loan. Not the case. They just changed that recently. You've got to keep up with everything that's going on. So with the credit, especially the second one, the credit for sick and family leave, you're still eligible for the credit even though you may have gotten PPP loans. You just got to make sure that you've got more wages than the PPP loan money. And another one, completely different, as an employer, you have the opportunity, if you so choose, to have payroll taxes deferred. And what I mean by this is, if you're an employer, you match the Social Security tax that's withheld from all your employees' paycheck, and that's at 6.2%. So your employee pays half and you pay half. The part that you pay as an employer, 6.2%, can be deferred. Now, the liability is not eliminated, it's just deferred to future times. So if there's a cash flow concern, for example, you might run a restaurant where you're continuing to paying your employees, as an example, on a limited basis because of the shutdown, you can defer to pay 1/2 of the amount to December of 2021, and then pay the second half by December of 2022. The concern is, though, if you defer these taxes, you won't get the benefit of the deduction on a cash basis until 2021 or 2022. So you do lose that deduction. This applies to any tax payments that might have been owed between March 27th and the end of the calendar year 2020. And the other thing to keep in mind is this can also be utilized for those folks that are self-employed. There's a way on your tax return to defer half of the Social Security for a self-employed individual to make those payments either in December of 21 and the other half in December of 2022. So to take advantage of these credits, you basically, a lot of them will be on 941, and that is specifically for example, the refundable portion of the retention credit. That's the very first one I talked about, where you're paying an employee even though your business is shut down. And then, of course, the same form, the 941, that's where you take care of the second credit, the qualified sick and family leave credit. And then if you're deferring the amount of Social Security you're going to pay as an employer, that also happens on Form 941, line 13B. All right. So let's get out of PPP loans. Let's get out of tax credits. Let's get into things that might be a little more entertaining. Not that this wasn't fun, but I know that a lot of folks don't understand the complexity of this because that's not your area of expertise. So let's talk a little bit about businesses. One thing that changed for the month of January 2021 is that businesses now, for independent contractors, have to file Form 1099 NEC, non-employee compensation, rather than 1099 miscellaneous. So in the past, whenever you had an independent contractor that you paid as a business, paid them $600 or more, you were required to send them a 1099 miscellaneous form. That has all changed starting with the 2020 calendar year. For returns due in January of 2021, you now have to send them an NEC form. And basically, just to kind of refresh everybody's memory, who do I have to send a 1099 to? Well, as I indicated, it's for any independent contractor that you pay $600 or more that's not a corporation or an S corporation. So if you're using an independent contractor that might be a plumber, might be an electrician, might be your accountant or your attorney, they have to get either a 1099 or NEC if it's a business-related expense, and they're not a corporation. So just briefly, here's what the old miscellaneous form looks like. And then the one thing to point out that I didn't mention is you're still required to send a 1099 to your landlord. If you look at box 1 of this particular form, is for rent paid. So as long as your rent paid is not to a business owner, that's a corporation, you're required to give them a 1099 form. And then if we look at the next screen, here is the brand new screen for the NEC form, where you drop in your independent contractor amounts for whoever might be your independent contractor. So that's kind of the form that's in place there. Just to go back just for a moment, typically those payments in prior years would have been in box 7 of the 1099 miscellaneous, but you can see they've changed that box where you no longer can put in a numeric amount. So that's why the change has been made. And for those folks that have been around a while, this predates me, but this is actually a form the IRS brought back from 1982. So we're repeating history here with the Form 1099 NEC. All right, so let's talk a little bit more about businesses. And I actually have some good news here having to do with business meals. So if you remember in the past, many years ago, business meals and at that time entertainment were only 50% deductible. And by entertainment, I mean maybe you had Blues tickets or Cardinal tickets and you used those to take customers and clients to the games. Those in the prior years were always 50% deductible. Now, 2 years ago, for the last couple of years, 18 and 19, they did away with the entertainment part of that. So business meals were still 50% deductible, but you can no longer deduct any entertainment. So you couldn't deduct your Cardinal tickets for clients, you couldn't deduct your Blues tickets, you couldn't deduct things like Sip and Savor, as an example, an entertainment event, because of the fact that it was no longer deductible. Well, nothing's really changed for last year, for 2020. Business meals are still 50% deductible. But the good news is, for the next 2 years, 2021 and for 2022, business meals now for your company will now be 100% deductible. And the reasoning behind this is to encourage businesses to go out and support the restaurant industry. So hopefully you'll utilize that and support your local eating establishments this year and next year. Not that exciting, but let me just pop up real quick the IRS mileage reimbursements. A lot of folks don't realize that the IRS does have a per diem that you can use on your tax return, whether it be for business miles or medical miles or charitable miles. Here are the rates for 2020. So basically, you still are required to keep track of your business miles versus your total miles, but then you no longer have to keep track of your fuel costs, your insurance, your repairs, your oil changes if you use the IRS per diem. Now, these are changing every year based upon fuel and vehicle costs. So you can see here as I pop up the numbers for 2021, the business rate and the mileage rate have dropped a little bit over the prior year. The charitable amount does not change, because that amount, that 14 cents a mile that's available for charity, is in statute. It's in the law. So what you have to do then is have actually it's going to take Congress to actually pass that, to change that from 14 cents a mile. And while we're here, let's just talk about this briefly. For charitable miles, what does that entail? Well, anytime you go to your doctor, you go to the hospital, you drive to pick up your prescription. I'm sorry, that's medical miles. You go to pick up your prescription, that qualifies as a medical mile if you itemize your deduction. Charitable miles can be such things as going to any charitable event that you might go to. The biggest example I see a lot of times is, for example, Meals on Wheels. Maybe you're a driver for Meals on Wheels. You don't get reimbursed for those miles always, and that might be an opportunity for you to deduct charitable miles. Okay, so we spent about half of our time here, unless it looks like Scott might have a question.
Yeah, it looks like we have a question from a Rotary member for the food and entertainment deduction. Is that for all businesses in 2020 and 2021?
Yes. I don't know if there's a specific business that they want to ask about, but no, yeah, on your business return for the 2 years, 100% deductible for the meals only, not the entertainment.
All right.
If there's any clarification, we'd be glad to answer that. So, okay, so we spent the first part of the time here talking a little bit about business deductions. The only other thing is we talked in our outline about working from home. Are those expenses deductible? Well, one of the changes with the major overhaul that happened between the 17 and the 2018 tax return is unreimbursed employee expenses are no longer deductible. And the reason for that is the automatic standard deduction almost doubled over the prior year. So you might have out-of-pocket expense for home office, for whatever it might be, your utilities, your rent, your insurance, your mortgage interest. Unfortunately, those are no longer deductible on your individual return. The other thing to keep in mind is I know sometimes an employer might give you a token amount each month, for example, for your cell phone as an example. And that's what's called an unsubstantiated plan. And unfortunately with that, because it's unsubstantiated, you're not turning in receipts and documents to your employer, that's still considered wages. So it should be added to your W-2. If they pay you, for example, $60 or $100 a month for your cell phone use, you'll probably see that included, whether you realize it or not, on your wage statement as W-2 compensation. Now, if you would submit actual cell phone bills, that's a substantiated business deduction plan, and therefore the income that you receive for the reimbursement would not be included on your W-2. And that includes not only for things like cell phone, but also for those folks that are currently spending all their time out of a home office because of the changing in the working environment. So that changed. 2017 was the last year that they had unreimbursed employee expenses. And will that come back in the future? Maybe. There was talk, there was discussion about it. But at this point, that is not an opportunity for you to deduct an office in the home deduction on your 2020 individual tax return. All right. So let's talk about a few individual things. This might get a little more exciting because I know everybody has to file an individual return. Not everybody has to file a business return, or not everybody has that responsibility within their business to talk about accounting and taxes and the fun things in life that make it challenging for me to come to work every day. So with that, you might have heard just, less than 2 weeks ago, the IRS has changed the tax filing season. So originally, typically, they would start accepting and processing returns for the 2020 tax year by the end of January. Well, you might have heard that's not the case this year. February 12th is the new day that the IRS will start processing individual 2020 tax returns. Now, your software company and the IRS may accept them before then, but they're not really going to do anything with them until we get to February 12th of 2020. And the reason for that, from what I understand, is they are so busy making sure that you and I each get our second stimulus amounts that they just won't have time until February to get around to processing individual returns. So at this point, they're going to start processing returns later than they normally do. And at this point, April 15th is still the deadline for your 2020 tax return. Will that change? Maybe. There's been talk, nothing in writing, nothing in any bill. But at this point, basically the IRS is going to try to process all the 2020 tax returns within a 2-month span. The other thing is anybody that is eligible for the earned income tax credit or the additional child tax credit, and if you are, you probably know who you are, by statute, those refunds cannot be issued until the first week of March. So an additional delay, once again, to get the refunds back to individuals based on the 2020 filing season. All right, well, let's talk just a little bit about the TCJA. We talked about that earlier in our presentation. That's the law that's been around for 3 years now. And just so you know, to kind of refresh your memory, you probably are familiar with the results of TCJA, but you didn't know that it was part of this act. That's the one where you currently have lower tax rates, whether you're a corporation or an individual. That's the one where the standard deduction on individual returns is almost doubled. So good news for everybody there. The exemption amount that you're familiar with in prior years, that went away. It's now 0. And of course, anybody that has a business on their individual return, a qualified business income deduction, that's also part of TCJA. And this is the one also, as I mentioned, where out-of-pocket expenses for unreimbursed employees is part of. Now, these changes that I mentioned, all 4 of them that I've got listed here, there's much more than that. These are effective for the tax years 2018 through 2025. And I can only say that as of 12/37 today on a Thursday, these are effective through 2025. It's my understanding there's something going on in Washington this week, and I would say stay tuned. These changes may become not in effect sooner than the 2025 tax year, but that's where we are as of today. Let's also talk briefly about the stimulus payments. So just so you know, to kind of refresh your memory, back in spring of 2020, you probably got a $1,200 stimulus amount. If you're single, you got a $2,400 stimulus amount for a married couple. And then if you had any dependents on your return under age 17, there was an additional $500 stimulus payment that you received. And of course, there were income limits in place. For example, if you are a single individual and your income was less than $75,000, you got the full amount. But once you got up to $99,000, you lost out on the stimulus amount. And of course, there was a phase-in in between for that $24,000. Likewise, for a married couple, if you're under $150,000 as a married couple, you got your full stimulus amount. That one phased out, though, at $198,000. So that happened back in the spring. And with that, you're going to need to know what you got both for phase 1 and phase 2. Phase 2, that's the one that just happened here within the last couple of weeks. It changed the amounts. It's now $600 for single, $1,200 for married, $600 for dependent children under age 17. And you should have gotten, for example, last spring, an IRS notice 1444. And you should be receiving, and I haven't seen any yet, a notice 1444B on what you got this go round. And the reason for that is on your 2020 tax return, this is the one you're going to be filing in 2021, you're going to have to reconcile the stimulus payments that you received in the spring and the one you just received. And the reason for that is if you're entitled to an additional credit, this is where you pick up the additional funds. So a quick example would be I had a client, a single mom, head of household, had one dependent daughter, and with the first go round, she received her $1,200 payment plus her $500 payment for her daughter. And that was based on her 2019 return. Well, the return that we're going to file now for 2020 is what all these stimulus payments are based upon. And she just had another child in January of 2020. So she has not gotten stimulus payment 1 or stimulus payment 2 for her brand new daughter, who I guess really is a year old now, not really brand new. But that's where we'll reconcile on the 2020 return, the amount you received versus what you're truly entitled to. So whether you do the return yourself or you have a professional tax preparer, you should make sure that you hang on to the 1444 and the 1444B. And that will make it much easier to see whether or not you got the correct amount or whether or not you're entitled to an additional refund. The other thing is, at this point, there is no provision in the law that allows you or requires you to pay back anything that you might have received. So, for example, maybe there was a dependent that you received. Maybe it's a situation where with a divorced couple, they switch custody every other year on the return as far as taking the dependent. And for 2019, you reclaim the dependent, but for 2020, it goes to the other spouse. Well, they base all this on the 2020 return. You're not required to pay back that $600 that you received way back in the spring. So some good news there. And as I mentioned, no provision requiring you to repay the amounts that you previously received. So the next question you ask is, what does a Notice 1444 look like? Well, here you go. Here's a copy of one that was received back in the spring. Looks like this one came out in March of 2020. And I blocked out the name, but you can see that right there in the middle, the highlighted part will tell this individual how much they received and how they got it, either by direct deposit or they received it by a check. All right, let's talk some more good news for individual returns.
Hey, Mike, we did have another question. Sure. Really quick. They said, what if you lost your job or got a lower paying position in 2020? Is this where the change would take effect?
Yes, it should. So, for example, if you had a job in 2019, you're above the income threshold. Let's say you were, making $80,000 as a single individual, lost your job, reduced hours, you're making less in 2020. You could recoup either payment 1 or payment 2 on your 2020 return as an additional refundable credit. It is refundable. So.
Okay. Very good.
All right. So I got some more good news for individual returns. Not a big amount, but in the past, many people to take charitable donations had to itemize their deductions. Now this past couple of years, but for 2018 and 2019, a lot of folks did not itemize their deductions. They did not use their charitable donations because they took the much higher single or married standard deduction. Well, now there is an above the line deduction on your tax return, on your 1040, where you can deduct up to $300 worth of charitable donations. The catch is, though, it has to be monetary. So it has to be either through a canceled check or through your credit card, or if you donate cash, as long as you get a receipt from the charity. It cannot be household goods. You can't donate your used t-shirts from 20 years ago and get a $300 charitable donation. But this really hasn't changed, and I know I'm going to hear a lot of folks say, well, just give me the automatic amount. Well, there really is no automatic amount. It always has been, and this hasn't changed. In order to deduct a charitable donation, you need to have proof of payment, whether it's a credit card, whether it's a canceled check, whether it's a receipt from the charity, and the receipt from the charity is required whenever the amount exceeds $250. So if you do have charitable donations, haven't really worried about in the past 2 years because of the automatic higher standard deduction, at least make sure that you get together information on $300 worth of charitable donations. As I mentioned, that is an above the line deduction. So you can see here's the bottom part, page 1, 1040, brand new line there, 10B, charitable contributions if you take the standard deduction, and you can put any amount in there up to $300. So it comes right off your total income before you take and figure out what your total taxable income is at the bottom of this page. So there is some good news scattered in here every now and then. You just have to look hard enough for it. All right. The other good news is if you're an educator, if you're a K through 12 classroom teacher in the past, you could always deduct classroom supplies, whether it's art material, whatever you needed for the classroom and you had receipts for, There was no automatic amount you should hang on to and maintain receipts. Classroom supplies can now include PPE. So if you went and bought your own mask, even though the school district might provide them, because from time to time, as you know, kids would forget their mask, maybe the strap would break. So that can be included in your educator expenses. And once again, this is K through 12. This is an above the line deduction up to $250 if you're a K-12 educator. So good news there for them. Let's talk briefly about the RMDs, required minimum distributions. If you're retired, semi-retired, and you were taking RMDs, required minimum distributions, there's no requirement to take one for last year, and a lot of folks decided not to. This came into play after the market dropped drastically in the spring because of the pandemic, the uncertainty. People didn't know what was going to happen and when it was going to happen. And as you probably saw, the market dropped, which means your retirement plan dropped significantly. And the government, the IRS, felt that if everybody was required to take out their RMD when their fund was at these lower amounts, there wouldn't be a chance for it to recoup. So they did away with the RMD for 2020. The thing is, though, for those folks that took out the RMD early, you did have 60 days to repay it up to August 31st. So there was some time to put the RMD back if you're one of those individuals that take it out right in the beginning of the year in January. The other thing that happened going back to the Secure Act, and that took effect as of December 2019, they changed the required age for RMDs. Typically in the past, once you obtained age 70 and a half, you were required out of your traditional IRA, out of your 401k, out of your profit sharing plan, you were required to take a required distribution each and every year. Well, they changed that to age 72, as long as you'd not obtained age 70 and a half by December 31st of 2019. So some individuals, even though it really didn't affect 2020, but going forward, are now not required to take out RMDs until the age 72. More things for individuals with distributions from IRA accounts. There is the requirement, not the requirement, the availability that if you took a distribution because of COVID-19 and you're under age 59, you don't have to pay that 10% early distribution penalty. Typically, once you reach age 59 and a half, you would only pay the income tax on the distribution from your IRA account. But if you were under 59 and a half, like myself, and I took money out of my traditional IRA, there could be a 10% penalty on top of the taxable income that you're paying on. The other thing is there is the option, still is the option, that if there is an IRA distribution, you can contribute that to your traditional IRA over the next 3-year period, and it will not affect the normal maximum contribution limit. So they're giving you a chance to put it back to your IRA. But once again, this provision has to be coronavirus related. So if you were laid off because of the virus, you had no other source of income other than your individual retirement account, you had to make your mortgage payments, you had to pay the rent, and you had to take money out of your IRA account, there is a little bit of relief here for IRA distributions in year 2020. Also, one thing that has changed is after 2019, so this would be for last year, for 2020, the maximum age for contributing to an IRA has been repealed. In prior years, once you got to age 70 and a half, you no longer were eligible to make contributions to your traditional IRA account. You could still do Roth IRAs, you just couldn't do the traditional IRA. Well, that has been repealed, so now individuals that are still working, still have a part-time job as an example, if they so choose, can contribute to a traditional IRA after age 70 and a half. One other thing that you may have received is a 1099 from the IRS, a 1099 INT, but you don't know what it's all about. Well, just so you know, last year, for the prior year, in 2020, for the 2019 year, the IRS may have delayed the processing of your tax refund. And that happened to 13,900,000 taxpayers last year, where the 2019 income tax refund was delayed. And some of that had to do with the fact that many IRS offices were shut down for almost 90 days with nobody there other than to do the bare basics. The average refund for interest was about $18 per taxpayer. But if you get a 1099 interest from the IRS, don't ignore it. That is income on your return, no different than if you got interest from a bank. So that should be in the mail if you haven't gotten it already. Let's see. We talked about that already. And the IRS will send out a 1099 for those folks that receive a interest payment of $10 or more. Just a couple more things here, because I know we're getting ready to wrap up time. One of the focus areas for the IRS, just so you're aware of, is virtual currency, Bitcoin and things like that. This is going to be an area of focus, and this pertains to anybody that has virtual currency, whether you obtain it, whether you exchange it, whether you redeem it. It's a taxable event. And there's a whole black market, if you will, on virtual currency that the IRS is really trying to focus on. And if you filed Schedule 1 with your prior return for 2019, there was a question on there. But this year, this question, the IRS feels so important that it's been moved to the front page of your 1040 tax return. So when you file your return, your 1040, right after the name, address, and so forth, you're going to see a question that anytime during 2020, did you receive or sell or send or exchange or otherwise acquire any financial interest in a virtual currency? And if you mark yes, then probably you have some virtual currency transactions that might need to be reflected on your Schedule D for capital gains or capital losses. So I know that if you e-file, for example, this question will have to be answered before it will accept your return electronically. Another area of focus, maybe not so much for 2020, but maybe going forward for 2021, is going to be 1099-C forms, cancellation of debt. I know there's a lot of individuals in the year that just ended that might have had, for example, a compromise on their credit card bills, as an example, maybe on a home mortgage loan. And typically that income reported on the 1099-C, the amount of debt that was forgiven, is income on the return. It's reportable, but you have to double check to make sure that it's not taxable to you. And what you have to look at is what's known as insolvency. So once again, if you get a 1099-C from your mortgage company, from your credit card company, don't ignore that. That's a reportable item on your return for whatever year that you receive the 1099 for. And a lot of folks don't get these till many years later. So for example, you might have made an agreement in 2020 with your credit card company to forgive half of the amount you owed and pay the other half in full. Well, a lot of times the credit card companies will pass this on to a collection agency that might take 3, 4, 5 years to try to collect it, and you won't actually receive the 1099-C cancellation of debt until such time 5 years down the road when they consider it uncollectible. Okay, one last slide here. Just so you know, if by chance we talked about something that might make you an amended return required, a 1040X, beginning with last year, the 2019 tax returns, you now can submit your amended income tax return, your federal income tax return, electronically, as long as the original return was also sent electronically. So it makes it a little easier rather than having to do a paper copy to file an amended return, starting with the 2019 individual tax return. So I don't really have any more slides because we're down to less than 5 minutes. I'll take any questions, but before I do that, I just have to big thank you to my son Miles, who has put this presentation together. I gave him the ideas and the thoughts, and he just ran with it from there. So thank you, Miles, for taking care of this for me.
I didn't think it looked like you put it together, so.
I'd be holding paper up to the screen. So.
Right. All right. Well, we'll give people just a few minutes here to ask any potential questions. Let me see if I can't share a quick slide here regarding our upcoming Chamber University next week on the 28th at noon. We're going to have one on goal setting. So we'll be back here. It'll actually be, that one will not be live stream. It'll be Zoom, so people will have to register in order to get the Zoom access information on that one. So please, if you're interested in doing that, make sure you get registered for the event. So anyway, does anybody have any questions for Mike at this point? Give him just a few more minutes to maybe ask a question.
I guess it was a perfect presentation then, would be the way I interpret it.
Apparently, it's pretty impressive what you're able to do. I don't know how, honestly, I was going to say, I don't know how you're able to keep all that stuff straight and with all the changes from year to year to year. I think, you know, we appreciate people like you, and we don't often share that, but I know when it comes to taxes, that's one of the things that I don't want to be an expert on. So I rely on people like you.
Well, and you mentioned changes from year to year. I mean, sometimes it's month to month, but one thing I've realized a long time is, you know, you hear this phrase that if you don't like what the tax laws are today, it's going to change. And I truly believe that with the new administration, we are going to see some changes. So what you see and what you like today or don't like today may be completely different if we talk 12 months from now.
Right. Do you have your contact information again, Mike? Can you go back to the previous slide? Was your contact information up there?
There you go.
And really quick, we do have another question here. Due to the nature of digital currencies, are they still taxed as like flat currency? Or I'm assuming it's supposed to be flat currency.
Yeah, I'm not sure what the terminology is for flat currency, but basically it's very similar to the buys and sells for mutual funds. You know, you look at the price you paid when you acquired the virtual currency, you look at the value when you dispose of the virtual currency, and you might have a gain, you might have a loss. It may be long-term, it may be short-term. But there is a website out there that will track all your virtual currency transactions. I know some people, and for example, Bitcoin, I know current price is, gosh, I don't even know what it is, tens of thousands or something right now, but it's quite significant, but it's definitely something that you don't want to ignore, and you want to get the help that you need. And we'd be glad to share that website with you that will track all your virtual currency transactions to make it easier for you.
Very good. Very good. All right. Well, it looks like that's all the questions that was thrown out there to you. So anyway, thank you very much, Mike, for joining us today. And again, don't forget about our next Chamber University next week, but you do have to register for that one. So with that said, I hope everyone has a great day, and don't wait until the last minute to file. Correct, Mike?
If only we knew when to file, you know, that's the key.
That's true. All right. Well, thanks everyone, and have a great day. We'll talk to you soon.
All right. And thanks, Scott, in the chamber.
You bet. Thank you.